Hello there, this is James, and you're watching Tixee Live. And a very good morning to all of you. In today's little program, as I'm back in the studio now from my travels, but today's little program, I want to discuss the slight mixed market sentiment we're getting currently at the moment, and ask a couple of questions about it, and and talk a little bit about that. Plus, talk about some major events happening this week. Huge events which could really rock the market, so to speak. But before we get into that, don't forget these little programs or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So first of all, I want to talk about a little bit about some news which happened during the Asian session before we get into the main topic. And that was the Reserve Bank of Australia raised rates by another 50 basis points. Now, this was pretty much how the market thought it was going to how it was going to play out. Many analysts had predicted this move, but this move is never really been done before. The RBA has never been this aggressive. And in fact, the matter is, we've now had 125 basic points of hikes since May, which is the fastest series of moves since 1994. So it is setting the precedent that all the main central banks are pretty set on being pretty aggressive when it comes to interest rate hikes. Because in fact, if you ever look at the interest rates at the moment, US, as we know, 1.75, CAD 150, Australia is now at 1.35%, Euro still waiting for them to do their move, UK is currently at 125, Swiss, who have done their moves, negative at 0.25, and of course, Bank of Japan still staying where they want to stay at negative 0.10. So yeah, it's sort of giving the impression that though the market sort of predicted that the RBA would do this, it is sort of given the sort of level that these central banks are being very aggressive and are intent to be aggressive when it comes to interest rate hikes. So let's have a quick look at how the Aussie dollar handled this move against the US dollar. Like I said, the market had sort of expected this anyway. They had predicted this. And on the back of that, it was really a case of buy the rumors, sell the fact. And the Aussie dollar became under pressure against the Swiss franc, but also against, obviously, the US Japanese yen as well, and the US dollar. So in general, it did come under a lot of pressure. I mean, if you ever look at it now, this is against the Kiwi. Okay, it's trading 1.10 against the Kiwi. Like I said, we've already said against the CAD, 0.877. So we're looking at Aussie dollar weakness across the board because, like I said, this was already priced in. But anyway, yeah. So then again, like I said, this is really sort of setting the benchmark for other central banks to be just as aggressive. And that, of course, leads us to talk about the FOMC, which is a major event happening this week. But we'll talk a little bit about that in a little while. So what else is happening in the market apart from the RBA's decision? Well, like I said, the market sentiment at the moment was fairly mixed. On Friday, I was talking pretty much very doom and gloom. The ending of the second quarter, ending of the first 6 months of the year was a pretty gloomy affair, and whether or not we have a continuation of that gloomy feeling for the rest of the year. But at the moment, the market's a bit mixed today because there is talk about something happening between the US and China. Sorry, throat's getting a bit dry. But there is talk about this because the US President Biden is leaning towards a decision on easing tariffs on goods from China. Don't forget, this was a big thing under the Trump administration. When Trump came in, he put a lot of tariffs on Chinese goods, and the Chinese did tit for tat and did the same with the US. So it was sort of almost like another economic Cold War, with the US sort of leaning towards a decision on easing these tariffs. Then that's a very positive move between the two biggest superpowers, two economic superpowers, that is, the US and China. In fact, Chinese Vice Premier Li He said the dialogue between himself And Janet Yellen, who's the US Treasury Secretary, was very constructive. And they are sort of moving forward on trying to come to agreement that they are going to be a lot more cooperative in their monetary policy and working together with each other. So this is sort of giving the market a little bit of a boost in some ways. But, like I say, like all the happy feelings, how long will this last? Because still, at the end of the day, we still have an awful lot of doom and gloom on the horizon. Don't forget, like I say, on Friday, I was out in the rain. I was in the UK getting rained upon. And I did say the end of the first half, the 6 months of 2022 was a pretty gloomy affair. And in fact, don't forget, the S&P closed the first 6 months of 2020 down 20.6%. That's the largest first half decline since 1970. So that is quite a shocking statistic there. Now, a reason why I say there's still some doom and gloom on the market is that some Wall Street strategists are predicting further declines for the S&P, with even some suggestions of a further decline this year in the S&P 500 of 15%. 15%. So it's still pretty, though we have a little bit of optimism because of this deal between the US and China, if they can start to cooperate together, that does give the sort of the market a boost that the two biggest economic superpowers are working together, and together they can help avoid a global recession, giving that little bit of hope. At the end of the day, the market still is expecting the R word, especially, like I said earlier on, with the RBA being aggressive with interest rate hikes and all the other central banks following suit. So this is what we have there. On other things as well, again, going down the doom and gloom road, Citigroup predict that oil could fall to $65 a barrel by the end of the year because of recession. So, yep, a little bit of optimism, but still there's this fear is still very much bedded in. And some are basically saying, and asking the question, is the recession already priced in? In my opinion, no, I don't think it is already priced into the market. So anyway, let's have a quick look on how the market is actually behaving at the moment, how it is actually feeling on the back of that US development, but obviously because of this other doom and gloom still very much on the horizon. So first of all, let's have a look at the euro dollar. Yes, okay, like I say, we ended the last week on the back foot. Euro dollar is still considerably under pressure, 1.0355 at the moment. So we are seeing dollar strength at that. If we have a look at the sterling, still trading at 120.71. Friday, when I went live last time, it was actually down as low as 119. So it's had a bit of recovery from that. It is under both the 100-day, 250-day moving average, and currently trading at 12071. But yeah, still obviously a little bit of dollar strength against the sterling. And don't forget, the sterling has its own problems, which I'll talk about in a minute. If we have a quick look at gold was crashed into $1,800 on Friday. We're back above the $1,800 mark, but just. We're currently trading at $1,803. It's got Bitcoin, again, remember, risk appetite, still under that key level we were watching majority of last week and the week before, 20,355. So yeah, there is not a lot of risk appetite when it comes to Bitcoin. So we have a quick look at how the indices are doing. S&P slightly lower, 3,823 points. The Dow Jones, 31,050 points. So this happy feeling, this optimism from this morning in reference to the US and China, not seeing it at the moment. Not seeing gigantic optimism currently there at all. Right, other news, other developments, talking about happy people. We have got Bank of England's Governor Andrew Bailey, speaking today. He is often very pessimistic. He has been a lot of times in a lot of his speeches. So it'll be interesting to see what he has to say in reference to that and how that's going to affect the sterling, which, of course, as we know, the sterling is under pressure, because of economic data coming out of the US, out of the UK, the fact that many people think the UK is already in a recession. Trust me, I was there. The prices of living over there is extortionate at the moment. And of course, the ongoing Brexit, UK trade war concerns as well. All this is raining down on the sterling. So anyway, key events other than Bailey, who's speaking today, we've got some major events this week. EU retail sales, US ISM services PMI, the big one, US FOMC minutes. That's going to be a key event. US ADP employment change, US initial claims, ECB Langard speaking. You know, she's incredibly dovish, in my opinion. US average earnings, and of course, US unemployment and US NFP. And I will be doing a watch along for the average earnings, unemployment, and NFP on Friday. But like I say, I think the main event will be the FOMC. Well, I'll do a special on that or after the event, a preview and a review of it. It'd be interesting to see what they say in these minutes, how aggressive they're going to be. Because the last time they raised the interest rate by 75 basis points, the most aggressive move they've done since 1994. So that's going to be interesting to see how that turns out with that. European markets, how they stand. Like I say, the FTSE slightly down, negative 0.16. DAX slightly up, 0.43%. Eurostoxx 50 currently trading at 0.55%. So again, a mixed emotions, but I'm not seeing this optimism at the moment from this US-China development. I think doom and gloom is still very much on the horizon, and I still think that is dominating the minds of the market. But let's have a look at how this session turns out. Especially, don't forget, the US is back because yesterday US was on a bank holiday. So it'll be interesting to see what happens when the US wakes up to join the party. Don't forget, you can ask me questions anytime you wish. This is what I'm here for. If not, you can just simply say hello if you like. So don't forget that. So yeah, please feel free. Oh, let me know what you thought about the Tixee Live on the road videos, if you'd like to see more of that. And it was a bit different, and I'm not in my studio, so I couldn't control my environment like I can here, but they were a bit different. Okay, if there is no questions, don't forget, sorry, really thirsty. Don't forget, if you think of questions later down the line and you want to ask me, put them in the comments on either YouTube or Facebook. I will see them and I will reply to the question. In fact, there was a question a gentleman asked me yesterday on one of the comments, and he said, will I be doing any live coverage of any event this week? And as I already said today, yes, I will be. I'll be doing a live coverage of the US non-farm payroll and obviously US average earnings, because I think the jobs are a key factor at the moment to many the decisions that the Fed may do. So yes, I will be doing a watch along for those events later this week on Friday, probably round about what time will it be? 12:20 p.m. UTC. I'll be doing that. Okay, if there is no questions, don't forget, I'll be back online again this afternoon at 1 p.m. UTC. We'll talk about what's happened so far in the European session, any further developments between this US and China story, plus we'll look ahead to the US session, because like I say, the US was on holiday yesterday. Be interesting to see what they bring to the table now they're coming back to join us. Right, if there's no questions, don't forget, if you're watching me on Facebook and you've quite enjoyed this little episode, by all means follow if you like. If you're watching me on YouTube and you quite like it, subscribe if you like. Hit the notification button so you know next time I'm going live. If you've enjoyed this episode and found it insightful and you've put up with me, my over enthusiasm on the markets, give me one of those. It's always nice to know that you're liking it. But on that note, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, 1 p.m. UTC this afternoon. Till next time, every single one of you, trade safe.